What's going on, family? Sir Ashley here, your real estate advisor, and I'm coming to you with an impromptu live stream. I was going to film something. Hold on, microphone. Have the wrong mic on. Technical difficulties. Where is it at? Bear with me. Ah. All right, I should have a microphone now. Here we go. Let's try that over again. Hello, family. Sir Ashley here, and I'm coming to you with an impromptu live stream. I was gonna film something about the housing market, but I was like, this is a lot. So let me just jump on a live stream right now and let's go for it and talk about the different things that I've seen in the past week. It is the Zillow updated forecast. We're talking about Fannie Mae updating their forecast for 2024. We have big news from builders and talking about inventory charts that I believe we need to be aware of in this national housing environment, in this market. But please keep in mind, real estate is hyperlocal. So while I give you these national numbers, it's wise to know what these national numbers are, but you should be paying close attention to what's happening in your area or where you want to buy or sell, because it's cute to know these national numbers and you can use them to your advantage when you see fit, but it may not pertain to your particular market because every market is a little different. If you have any questions, please leave a comment. Go ahead, like this video, share it with friends and family. I definitely appreciate it. Let's jump right in. Where am I at right now? All right, so first I want to talk about builder activity. If you've been following the page for any length of time, you know that I am in the Carolinas. And I said last year that the Triad area, Winston-Salem, Greensboro, High Point, is a prime area that I believe wasn't taken advantage of. Many people overlook it. Many people go to the coast, go to Wilmington. They may go to Raleigh, the Triangle, Raleigh, Chapel Hill, Durham, or they come to Charlotte. But the Triad area, Winston-Salem, Greensboro, and High Point, is where I see a lot of opportunity because you can get the same home. These builders are building the same exact home there, but for 150, $150,000 less, and you get more land. And based on the census, you see that building activity, areas with the biggest increase of single family homes, number one, we have Winston-Salem, North Carolina. Now they're comparing the permits in 2023 to 2021. So you have Winston-Salem, you also have Asheville, North Carolina, Biloxi, Mississippi. A lot of interest is going to Alabama and Mississippi right now. I'm not quite sure. A lot of people are moving to Alabama because they feel Florida is just more expensive or too expensive, so they're moving to Alabama. But Mississippi, I can't quite put my finger on that one. Then you have a couple places in Florida, and you have Myrtle Beach, Conway, North Myrtle Beach in South Carolina. Now, yes, that area is growing. Tons of opportunity. Yes, it's touristy, but as you get to North Myrtle and Conway, you have more industry in that area. You see Asheville. And then this one shocked me. Los Angeles, Long Beach, and Anaheim. I used to live in Los Angeles, and you don't see too many new construction because there's just not enough land. So that shocked me. But moving on, let's talk about the mortgage rates for the past not even month, just this year. Mortgage rates are going up right now. You see, they started off in 2024 at 6.69%, and right now they're just below 7%. Now, even with that going up, we're still seeing more buyers come into the market than we had in the fall and winter of 2023. That's because rates have come down a point, over a point, since its peak around 8%. Now, they are going up right now because the economic data is just coming in very strong, very hot. We aren't seeing those recessionary numbers that we thought we were going to see. I say we, economists thought we were going to see. So therefore, you see everybody's like, the economy is not doing as bad as we anticipated. So you see interest rates going up. And a large thing to do with that had to do with Christmas shopping. Many people thought Christmas shopping and consumer spending would be down. That's not the case. So right now we see interest rates going up. Now, interest rates are still projected to go down this year, but they're sitting just below 7% right now. And if you're looking at new construction, builders are offering buy downs, and I will get to that in a second because this is a key thing that I pointed out a few times in the past 2 weeks where I was talking about take advantage now because builders are giving incentives and they may not do so later on in the year. Well, there's an article by the nation's, not by the nation's biggest builder, but quoting the nation's biggest builder, talking about rate buy downs and what to expect. And we're going to touch on that shortly. One second. You got that? Where am I at? Oh, let's talk about Fannie Mae, Freddie Mac, what they project to happen in 2024 and 2025. Right now, in 2024, Freddie Mac is saying home prices will increase 2.8%. And Fannie Mae is saying they'll increase 3.2%. And in 2025, when interest rates are projected to be lower, they're saying Freddie Mac 2% increase and Fannie Mae 0.3%. Now, I'm not quite sure how I feel about this because if interest rates are going to be lower in 2025, I don't see prices just going up 0.3%, like Fannie Mae said. Now, 2.8 and 3.2 for 2024 seems about right. I will welcome that compared to the pandemic when rates were appreciation went up 10, 15, 30% in some areas. Now let's go back to, give me 1 second. Let me pull up the next things I want to talk about. And again, if you have any questions, please leave your comments below. What's going on, Just Enough Light? I appreciate you jumping on with me. This was impromptu to the real estate community in the Charlotte area. I'm actually having a mixer tonight at the Trolley Barn at 6 p.m. I may be a little late, but if you feel free, if you're in the area, South End, come on out to the mixer. It's just for realtors, mortgage brokers, anybody in the real estate industry, insurance brokers. Come on out, have a good time, and just network with like-minded people. Let's go to the next thing. All right. So, as we talk about builders and what to expect moving forward, D.R. Horton, the nation's largest builder, recently said on Tuesday that they've had huge success with their rate buydowns. And new construction sold 11% more last year than they did in 2022. And that's because there just hasn't been any resales coming to the market because those homeowners locked in those 2, 3, 4%, even 5% interest rates, which are very attractive. But in order to compete with that, new builders gave rate buydowns. And where are we at right here? He said our most successful incentives recently has been interest rate buydowns. They're generally offering a point below the market 30-year fixed mortgage rate. Now, that's nationally. Here in the Charlotte area, I've seen them buy the rate down to 3.99% for a 30-year fixed. And their most prevalent one in the Charlotte area is 4.99. So you're able to buy buy a new construction home, get a 30-year fixed interest rate for below 5%. That's how they're competing. That's how they're selling 11% more homes, talking about new construction as a whole, compared to 2022. But what I found particular was, trying to find it right here in this article, where he says they have no plan in the near term to stop utilizing the mortgage rate buy down, even when rates come down. Now, I've been telling people to hurry up, act now, because when interest rates come down, these incentives are going to go away. Well, Paul with D.R. Horton says otherwise. And if D.R. Horton, now granted you have to take their word for it, if D.R. Horton continues to have rate buy downs and they're the nation's largest builder, that's going to trickle down to all the other builders because they're going to have to compete and offer rate buy downs as well. Now, that's not to say prices won't continue to go up, but these incentives and rate buy downs will be here, so they say. We have Nadine. We have D.R. Horton seems like the builder that does the most price adjustments in addition to rate buy downs by buying the 30-year fixed rate. Yes, reason why they do the most, or even it seems that way, is because they have the most inventory. They're the number one builder here in the nation, so they just have so many communities, and they control, not to say they control the market, but they set the market. And then the other builders typically fall in line. So that's why we're seeing that, and they can, depending on the community. Some communities in the Charlotte area, you can see rates, they give crazy incentives where 399, but then other communities in more established areas, I should say, they don't offer as many incentives. They might offer 15,000 in closing costs, but not that extensive rate buy down to a 3.99 or 4.99 interest rate for 30-year fixed. So it really depends on the community and the location. That's why, while they're speaking on national terms, you have to know what's actually happening in your particular market and just get in tune with a real estate professional that is familiar with new construction and can compare and contrast the different builders and their incentives, what they're offering at the moment. Juicy fruit, yes, yes. Their incentives should be continuing according to D.R. Horton. Now, I'm not saying we should wait and see how long they're going to continue these incentives, but in the statement they did say they will continue it. And we see how the incentives, the buy downs, has played a factor in their profit margin. If you look at this graph right here, you can't really see it too well. Let me see if I can zoom in. Here we go. This graph right here, you see in right here, their profit margin, gross margin in 2021, 2022 was ridiculous, over 30%. Now, that's not sustainable. That's not sustainable at all. But as we've gone in and interest rates increased, you saw their profit margin take a plunge, right? And right now, they're at 24.4%. Now, it's significantly less than the over 30% it was just a year and a half ago. But if you look at it, they're still higher, their margins, even with giving these rate buy downs, offering buyers a 4%, 3.99, or 5% interest rate. They're still making significantly more profit than they did in 2019 before the pandemic started. So that's how they can offer these rate buy downs as opposed to lowering the price significantly, because they still have a healthy margin to do so. And one of my partners, Sean Gerald, I think Selling Charlotte, I believe his YouTube handle is. He just did a short talking about this community. Yes, it's in Georgia, but where they're talking about the special rates that they're offering in certain communities. Let's go to the next chart. Next thing I want to talk about, institutional landlords and investors. This is a hot button topic when talking about the housing market and inventory. People complain about there being a lack of single family homes on the market because investors are buying up, these institutional investors are buying up everything. And that is the case. And this looks at where institutional investors have a significant foothold on certain cities. Give me one second. Nadine says it is very community specific and depends how many homes they have completed. Most definitely. They're they will definitely offer great, and talking about they builders and DR Horton in particular, but all these builders, they have spec homes that are done or near completion. They will not necessarily take a huge price cut, but they will offer crazy incentives to get that home off their books. Especially what in December toward the end of the year, they were really trying to move these homes. So areas where you see a large number of institutional investors for single family homes, you have the Atlanta, Sandy Springs area. Again, right here, Winston-Salem. And I'm pointing these out because as homeowners and individuals or potential homeowners, you have to look at what big players are doing and where are they going. They've already done the market research to see where are the people going, where are there going to be jobs, and if you want to be in these areas, you need to act faster because they're coming. And when they come, they're going to take up a huge market share, and then you're going to be wondering why are homes so high and why there's not as many available. So follow them. You have Atlanta, you have a 36% of single family homes are owned by institutional investors. Winston-Salem, 33%. Charlotte area, 32%. That's actually down from what it was right in the beginning of the pandemic. Now, that's still a significantly high number, but it's down from what it was. Greensboro, High Point, again, that triad area with Winston-Salem, 25%. Raleigh, Cary, Durham, 24%. Which one shocks me? I'm actually surprised that Columbia is so low at 15%. And I'm thinking it's because a lot of their homes are older and dated. And these institutional investors have realized that when you buy older, dated homes, that is a money pit. So typically, the ones that are higher up on the list have, or the general areas have new construction or newer construction to where they can buy it and rent it out without having to do major repairs in the next 5 years. Where else are we here? Nashville. I thought that might be a little higher at 25%. Let's go to the next article where we talk about inventory. This is what I want to get right here. So people are wondering, why are home prices still high even with these higher interest rates? And we have a map talking about inventory levels. And here we are. If you have a county or an area you want to highlight, please leave it a comment below. Right now I'm gonna focus on the Charlotte area. If you're in Mecklenburg County, wondering why prices are significantly higher now than pre-pandemic, it's because we have 36% less inventory on the market. So you have more demand and not enough homes coming to the market. If you're wondering, if you're in Gaston County, I told you I did a live stream with my partners Sean and Tijuana, and we talked about areas of opportunity, and we pointed to Gaston County because it has more inventory now than 2019. And if you have more inventory, prices pretty much meet a cap. So either they meet a cap or they're coming down. So that is a place to capitalize if you see more inventory, especially around a major city that is a hot destination. You saw Cabarrus County, which is just north of Charlotte. You have Concord, Kannapolis, Harrisburg. That is down 31% in inventory. And Kannapolis right now, or Harrisburg, Concord, and Kannapolis are seeing a shift in prices going up, significantly up. And that's because you have less inventory. Paul, what site is this? This is Resi Club. It's a paid site. I'm a nerd, if you didn't know. I like getting into the data and the weeds. So Again, I was going to do a recorded video, but I figured might as well just jump on a live stream and go over the different things I was going to touch on in the video or the live stream. In the recording anyway. But Resi Club, it's about $200 a year uh, to jump on and get this kind of data. And where else? York, South Carolina. Now, this is shocking somewhat. You have less inventory available in York County, South Carolina. And I was saying that that is really a opportunity zone right now. Opportunity zone is a technical term. It's a place for opportunity because there's a lot of inventory coming right now. You have every builder, you have Meritage, you have DR Horton, you have Century Communities. Um, a couple other builders. I'm drawing a blank right now, all going into York, South Carolina, and building large communities of anywhere from 200 homes to 800 homes. So that will increase the inventory, and prices there for what you get is a steal compared to what you get right in Mecklenburg County or even what's the next county over in Chester County, which is further away. So you have Union County, which is a highly desirable county. Union County has the second highest or best school district in North Carolina, only behind Wake County, which is Raleigh. So a lot of people love Union County, and they're wondering why are prices so high in Monroe, or we know why in Waxhaw and Weddington, because it's just very affluent there. But that's because in Monroe prices are up there because you have 45% less inventory. But the demand is still there because you have very good schools. It is Lance Lambert, Resi Club. Lance Lambert used to be an editor for Fortune magazine, and I would say maybe 3 months ago, maybe 2, 3 months ago, he started his own company, Resi Club, and it's very insightful. He gives You can sign up for it. Actually, he gives 3 articles a week away for free, and then to get the the premium stuff, that's when you have to pay extra. And the premium goes into, you get to mess around with this data and manipulate it and see what's actually happening. We have a question regarding Somerville. Somebody's interested in that area. Funny enough, I literally had a closing in Somerville last week. This is a settlement statement right here. Um, so I was in the area. I love that area. Somerville, you have North Charleston, you have Monk's Corner. Uh, it's growing. It's growing. They're building huge developments. Lennar has a community there that's going to be over 8,000 homes. They're going to be there for a while building. So no, Somerville is very good. Uh, the Del Webb community. You're talking about Nexton, I believe. Four Corners, Bayer, Del Webb. Reach out to me, Sheila. I know we've talked in the past. Reach out to me. We can definitely put you in contact with some of the builders and find a good deal for you. I'm not sure is what correct, Paul. Let's go to the next thing where so you see Resi Club Pro. I pay for the pro version of Resi Club. Zillow, based on what has happened in the beginning of the year, they revised their housing forecast to say prices are going to be up 3.5% from December 2023 to December 2024, which again, depending on how you look at it, is a good thing or a bad thing. If you own a home, it's a good thing. It means you're gonna have more equity. If you're trying to buy and you wait to the end of the year, it's not going to be a good thing because interest rates are coming down and they're projected to end. Um, Actually, I saw something today where they're projected interest rates to be in the fives by the end of the year. Now, I don't think that's going to happen. I think it's going to be low sixes, but one of these large national corporations are saying interest rates will be in the high fives at the end of the year. If that's the case, that's just going to drive much more demand and cause prices to it might it would be probably more than the 3.5% that they're predicting. And when you look at this map, another map where you talk about where they see the price shift, let's touch on it. You have Charleston, North Charleston. This is where, so I consider, let me see if they consider it. Yeah, I consider Charleston, North Charleston, Somerville area in this North Charleston demographic. So they're saying home prices in that area will be up 4.7% based on the projections. Columbia, 4.1%. Now, Columbia is a unique area because if you're concerned about prices or want a lot of bang for your buck, talking about new construction twos or threes, Columbia, I direct a lot of people to Columbia for that, and they put them in contact with a team member of mine in that area. That's what I'm talking about, Sheila. Reach out to me. Actually, schedule something through the Calendly app, and let's talk tomorrow or sometime early next week. Where are we at here? We're talking Columbia. Yep, talk Columbia, Greenville. I really like the Greenville Anderson area. It's just a lot to do. It's a very diverse young population in Greenville. Charlotte, Mecklenburg, they're saying it should go up 4.8%. I don't like that number. I think it should be lower. I hope it's lower. That's just a lot of price increase. And I'm not sure they're factoring in all of these insurance premiums that are projected to happen, because if these insurance premium increases do occur, that's going to have a strain on how high prices can go, because we still have an affordability problem or issue. So you got to take that with a grain of salt and still think about that on the back burner. Winston-Salem 4.3, Burlington 5.5. Let's see, Wilmington 5.1. Wilmington's over by the coast. Shout out to my sister and my brother. They both live in Wilmington. Home prices there have been going up, but the insurance premium, because they're right on the coast, is supposed to shoot up over 99% this year projected. They'll probably end up around 70%, but it's still significant if you're on a fixed income or just have a budget to have your home insurance double. That's crazy. Let's look at Florida, Miami, 5.3. I'm sure people in Miami will welcome 5.3 because in the last 3 years it's been absolutely crazy as far as just insane numbers of appreciation. I was talking to somebody today in Celebration, Florida, thinking about moving to the Carolinas. See a 4.4% increase. Where are we at here? So that's what I wanted to touch on during this live stream. I don't want to take up too much of your time. And as you see, it's almost 5 o'clock, and I have a real estate networking event that I'm hosting at 6 o'clock that I need to get ready for. Actually, we'll put on something more than a hoodie. So if you're out, you might see me in a sports coat. We'll see. No pictures. So I do appreciate y'all rocking with me. If you have any questions regarding the housing market nationally or in the Carolinas, please, I would love to do my best at answering them. If I don't have an answer, I'll tell you that and give you some resources that you can probably go to find the answers. As you see, the housing outlook is positive going into 2024 as far as home price increasing. Uh, if you're a buyer, it's positive. This news from D.R. Horton for new construction saying that they're going to continue with the rate buy downs incentives. And if they do that, they're going to have a huge impact on the rest of the market, the rest of the builders. And it also impacts resale homes, because one of my listings just recently, but we came to the conclusion that it would just be best to offer rate buy downs just as a marketing ploy, because we understand that our competition is new construction and they're offering rate buy downs. So D.R. Horton is going to cause even homeowners to offer rate buy downs to compete with what they're offering as far as price and affordability. I do have a video coming out today. I think it's about Concord or something like that. Uh, Regardless, I appreciate y'all rocking with me. Again, this was impromptu. I didn't plan on jumping on this live. I will see you all next week, and go Chiefs. See y'all later.